Hello, my dear students. I'm Dr. B. Nandini, Assistant Professor, Department of Management Studies, SRM Madurai College for Engineering and Technology. Today, we are going to discuss about GAAPs, that is Generally Accepted Accounting Principles. Now, what is GAAP? Generally Accepted Accounting Principles. It is defined as the set of accepted industry rules, practices, and guidelines for financial accounting. It includes the standards, conventions, and rules that accountants follow in recording and summarizing transactions and in the preparation of financial statements. Now, these are few principles. These are the principles which is followed all over to have an uniformity in accounting, in the preparation of accounts. Assumptions, concepts, principles, conventions, and rules. Now, first we look into business entity. Business entity means what? A business, your business. Okay. Now we always say that a business is different from the person. The owner is different from his business, his company. The company or the business which he is having, the company, it's called as an artificial person. The owner is the real person. His company is called as an artificial person. So the owner is differentiated from his company. That is business entity. Now let's come into going concern. Now what is going concern? The business continues to move on even if the owner dies. The business does not die because we have already discussed that a business is an artificial person. It's different from its owner. People in a company may come, they may go, they may retire, they may die. Whatever happens in the company, it will not affect the company until and unless it is legally dissolved. So going concern, the company moves on until the company is legally, it is dissolved. Money measurement concepts. It's again a very important concept. Everything in accounting is measured in monetary terms. You measure everything. You say so and so transaction, in a transaction you can say that so and so you have purchased. Mr. A has purchased some goods for rupees 1,000. So you say that rupees 1,000. You just can't imagine over it. You have to measure it in monetary terms. So whatever is there, the things have to be quantified. You just can't say blankly. You have to quantify it in monetary terms. Next it comes accounting period concept. All of us know the accounting period is from 1st of April to 31st March, which every company, every organization follows as the same. So these are the few generally accepted things, generally accepted by all the business all over. So every business has their accounting period from 1st April to 31st March. Objectivity. For what object is the company built up? For what object have you established your business? That has to be clarified. Dual aspect concept, that is double entry system of bookkeeping. That is, each and every transaction which takes place has dual aspects. It will be having effects in two places. One will be debited, the another will be credited. So if in a transaction, one account is debited, another has to be credited. Only then it gives a balance. The detailed aspect of it, if you follow my further videos, you will be able to understand it much further. Next comes cost principle. Everything has its own cost. Everything has its own cost. You say, you go to a market and you buy some products, they will tell you it is of 10 rupees, this is 20 rupees, this is 1000 rupees. So everything has its own cost, which you are measuring in monetary terms. Accrual principle. The accrual principle says that something which is being due has to be recorded. That is, if a concerned employee has to be paid salary on that month, an entire month the employee has worked, on that month end you have to pay salary. If you have paid, you will be recording. Even if you have not paid, you have to record it as outstanding, which is has to be paid. So accrual principle, anything which you have to be paid or anything you are prepaid, outstanding, all these things has to be recorded. Matching principle, as already I had told you, everything has its dual aspect, one debit, one credit. So when you say matching principle, a debit has to get a credit, it has to be matched, only then you will get a balanced balance sheet. Next is your um, next comes realization concept, realization principle.